This is Kerry Artak with Wicked Signal. Today's video, recorded Tuesday, December 8th, 2020, is on PayPal Holdings Incorporated, symbol PYPL. Everybody knows about PayPal. Everybody uses PayPal. If you do any online shopping, you're bound to have. I'll give you a brief descriptor. It's an American company operating a worldwide online payment system, supports online money transfers, and serves as an electronic alternative to traditional paper methods like checks and money orders, so forth and so on. I'm guessing you know a lot about PayPal. This is a stock analysis, technical analysis. Before I jump into it, let me just remind you to tell your investor and trader friends and yourself, if you haven't already, to go to wickedsignal.com, the free subscription form, fill that out. First name, last name, email address. You or they will receive an email every time a new video is released. Trying to get to one a day, but it's at least two or three a week lately, each on a different stock or ETF. You know, you will not be loaded, your inbox won't be loaded with sales pitches, and I do not sell your information or give your information to anyone outside of the organization. So let's jump into PayPal. This is a long-term chart. You can see going back to the 2015, this is when it spun off of eBay, I believe, and became its own company. I'm going to show two things actually in this video. One is that we're presently testing meaningful resistance in the upper 210s. Last trade is 216.94. It's around 219 and change. I'll show that. It's a changing, kind of a moving area. The upper 210s are being tested. This area can actually absorb buying into the first quarter, and below which the 180s are in reach, 1 to 3 months. Could be 1-2 months. I give it 3 months at the very most. And, quite frankly, it could be 3 or 4 weeks, depending. On the other hand, a weekly settlement above this upper 210s resistance I'm going to show you by at least a 1% margin, I might add, indicates 1 to 3 months price gains into the 260s or higher. And I will show that as well. So we are testing a ceiling of resistance. But before I jump into all that, I just want to give you a little history here on this chart. You can see the extremes. 2015 was a $30 low. Most recently, February of 2020, 124.45. We broke to 82.07 on that COVID low of March, and we really haven't looked back since. In fact, I just want to show, I'm always looking at historically, when did this market really, in my opinion, show a long-term buy signal? And that was actually last May when we cleared this channel top, presently at 142 even for the month of January, but at the time was 132.5. Now, as you can see, recently, really since the August high, we've been trading kind of in this two-sided, I call it kind of a W formation here. It's an ascending or slightly ascending, mostly horizontal channel top that is at this week, the week of Monday, December 7th, 219.01, and it rises 4 weeks later to 220.83 as per usual. You can subtract these out, divide by 4, and you'll know exactly where that channel top is each and every week in between. If we get up and over this formation, in other words, if we close above 219.01 this week, the week of Monday, December 7th, by at least a 1% margin, I am anticipating then bullish continuation. Will that take 3 or 4 weeks? Will that take a couple of months? Somewhere in there, 60s. Right now, that formation is at 256.40. It rises the first week of January to 267.99. I haven't done the math, but I think we're looking at, let's see, at least a 20% price gain if we get into the 260s. Maybe a little bit more if it takes a little while to get into the 270s, say, as we continue into mid-January, and that's certainly possible. So 219.01 to 220.83, that is our breakout resistance. And I do mention here that if we close any week above this 219.01 channel top by at least a 1% margin, and I like the 1% margin because it provides clarity. If we settled at 219.10 or 219.20 at the end of this week, that's just by too narrow a margin to provide confidence. But if we can close at 221.20 or higher this week, for instance, which is the 1% violation of 219.01, then we have bullish continuation indicated over the next 1 to 3 months into the 260s or higher. So that would be a nice buy signal. That hasn't happened yet. I'm giving you the heads up here. I'm giving this to you before Friday so you can be the determiner of this trade. Right now, the inverse way to look at this is we're holding below 219.01. We have yet to settle any week above it. This market is pushing its head against the ceiling of resistance, and from here we could actually fall back. Holding below 219.01 does allow bearish retracement into the 180s over the next 1 to 3 months. And I say allow very purposefully because I do not have a signal per se. But if you're an options trader, for instance, this is call selling territory. Obviously, you're going to stop out with a settlement above this 219.01 area on Friday. But as long as we continue trading below this area, continue placing weekly settlements at or below this area, you can sell calls. I'll let you be the determiner as to what they may be. You could buy puts in the 180s, for instance, because this 177.93 formation rising to 180.43 the first week of January. Once again, they're 4 weeks apart. You can subtract them out, divide by 4, and you'll have exactly where that channel bottom is each and every week up until the first week of January. Holding below that 219.01 formation in the previous slide does allow the market to fall back into the 180s over the next 1 or 2 months, 3 at the very most, and that would be nice bottom picking territory through the first quarter. I don't know if we're going to get there or not. Obviously, those are the unknowns. But that is really it in a nutshell. There's really not much less to say here. I'll finish it with this. Holding below the 219.01 formation allows the 180s over the next 1, 2, 3 months at the most. Inversely, closing above the 219.01 formation December 7th by at least a 1% margin, which would be a 221.20 settlement or higher on Friday, indicates bullish continuation over the next several months into the 260s. And I'll let you play it as you will, but I think this is pretty good stuff here. This is pretty clear-cut, classic technical chart formations that are relatively reliable, and so I'll let you be the determiner as to whether you trade this or not. And that is really all I'm going to say for this particular video, Wicked Signal video on PayPal.